Welcome to the Paradise Paradox. My name is Aaron Battle.
My name's Kurt Robinson.
Today we run through a second part of the economic collapse. So crisis, no crisis. We talk about Bitcoin, the possible role of Bitcoin in the future, money supply. Are they printing too much money, and what effect is that going to have on inflation? And how does that compare to deflationary currencies?
Yep.
Possible future option.
New technology, new financial technology, and we're talking about perhaps how the pension structure of many first world countries is going to act as a trigger to set off some very bad economic situations.
Where is your pension fund?
Yeah.
Are you in sound money? Have you got your assets in your back pocket, or are they somewhere else?
Did your 401k or superannuation put all your money locked up in the share market where you can't touch it until you're 65 or 70 or 75? Are they going to keep pushing the date of retirement back indefinitely? Who knows? Maybe you'll never see that money. And we get into that and more. So press like, press subscribe. Subscribe on iTunes, Pocket Cast, YouTube. Press like on Facebook. And toss us a few bones if you like the show. We suggest $1 per episode that you like. And donate.theparadiseparadox.com.
Check it out.
Press like on YouTube, press like on Facebook, press subscribe on YouTube, iTunes, and Pocket Casts. Just a reminder, we're not financial advisors and we don't know your personal situation, so don't take anything we say as financial advice. Enjoy the show and show your support at donate.theparadiseparadox.com.
Welcome to the Paradise Paradox. My name's Kurt Robinson.
My name's Aaron Battle.
So today we're going to be addressing the concept of a coming economic collapse again. We're going to talk about whether there actually is an economic collapse coming, some possible methods which it might be coming, some things which might cause it. And we're also going to be talking about some current economic factors relating to China, other things relating to the world economy.
Basically, a part two. I just feel like everything's changing so fast, and it's in our interest. So, we'll cover it again.
What ideas do you have about it?
Well, I mean, what kind of got me on this whole track again was the news that there's going to be a new little competition to the SWIFT international transfer system. Those that aren't up on that, when you transfer money from bank account to bank account internationally, it's probably most common that you're using the SWIFT system.
Yeah.
And it, as of, I believe, last week, it looks like there is a alternative that China's set up called CIPS, which is, I guess it's basically a Chinese version. Are you much aware on that?
No, I've heard a little bit about it, but no. Have you ever used SWIFT?
I have.
Yeah.
I mean, not recently, but maybe about a year ago.
Okay.
Pretty much my first trip when I transferred money across, and it was because it was just, I don't know, I never thought about it. I just transferred money because I wanted money to be here when I arrived, and it seemed more than just your average, normal expenses.
Right.
I wanted to set a few things up, and it required a transfer. So, I didn't think about it. I just went to the bank and said, how do I do the transfer of money? They gave me a form. I filled it out. The exchange rate seemed about what I was advertised to believe. So I was like, okay, cool, go.
Okay. But it took, I'm guessing it took about a week to actually get
They told me 3 days, and it was really about, it was about a week, including the weekend. But,
okay.
I mean, it wasn't that uncomfortable. It was just, is this going to work? I've never used it before.
Yeah. Well, a friend of mine had a problem when he was trying to wire some cash to a bank in the Czech Republic. He was trying to wire it to the Bitcoin exchange, BTC-E, so he could buy some Bitcoins. And he went to the bank and they were like, yeah, it's going to it'll cost you like, they were giving him some ridiculous charges. I think it was, I don't know, $30 or $40, something like that, for an amount of a few $1,000s, and then they told him it would be 3 to 5 business days or whatever nonsense. It got to about 7 business days and it still hadn't arrived in his account. And so he went into the bank and said, well, this is ridiculous. I mean, we had an agreement. You haven't done what you said you were going to do. So can you cancel it? And they said, well, we can cancel it, but it'll take another 3 to 5 business days to get back into your account. And of course, the bank on the receiving end might charge you for cancelling it. So this is the level of inefficiency that we're dealing with here. We're basically talking about a system where they're transferring numbers from one country to another, and they can't do it instantly, which is what we expect in this modern era. And after that, of course, he was like, now I see why Bitcoins are so important.
Well, yeah, text message or, instant messenger. We're all quite accustomed to send the message and click go and it's done. In hindsight, I mean, the rate that I got was appalling. It's just, you need to get some business done and you need transfer and you think it's going to take 3 or 4 days and you hear that and he's trying to work out, how long it's going to take. The pressure of I just want it done already. And then you walk past every bank and they've got, your exchange rates there advertised to you. So you just assume that's what it is. Most people wouldn't consider to actually go online and check, real rates compared to bank rates. It's not your everyday calculation.
Yeah, but the thing is, I mean, if you put in, say, I type into Google 100 AUD Australian dollars in USD, US dollars, it's going to come up not with the rate that's available for you and me, but it'll come up with the rate that the banks get normally, the official rate, the list rate, which is, that's what the banks get from each other, but that's never what we're going to get because we don't buy dollars wholesale.
Well, I don't even look at that anymore because I'm on the Bitcoin bandwagon now, and it's like any country I go to now, it's going to be I don't know how. I'm trying to think, how would I do that? I mean, most of my savings now are in Bitcoin, or at least my active savings. What if I'm going to travel, where I'd be pulling money from? Because there's no way I'm going to be using their old school system. It's just not going to happen. It's as bad as trading and going to the airport and trading your cash for a rate, and of course there's ridiculous fees and service charges on that as well. I don't even know how those businesses are still there. I guess convenience, but who uses cash?
Wow,
those drug dealers.
Everybody in Mexico uses cash.
Well, I just said it.
Yeah.
All right, so that's talking about transfer and international money. But if we jump into Bitcoin, it was interesting. I noticed that it seems to be it's like everyone's waiting for the next exchange to have a little hiccup or issue. Like there's so many exchanges now.
No, but who is waiting for exchanges to have hiccups? Why would you say that?
No, it was just that I think. Well, talking to anyone that's got Bitcoin, you should probably look at securing that. Like there's so many different options now. I know I've been in the Bitcoin world for a couple of years, and I've still got bits and pieces of Bitcoin from old trading sites that are floating around, and I spent a good half a day trying to track down all my bits and pieces and to put them into a safer place because you just if you don't keep track of it, there's so many new wallets and options now. So why wait to be doxxed if you've got so many new wallets open? Yeah,
and you had a problem with it, not with MT Gox, but with a different site.
No, it was a little while back, but MintPal was one that you just don't think about it. And I thought at the time, you store a few Bitcoins offline, and then I thought, okay, well, I still want to be actively trading Bitcoin, so. You mix it around a little bit and you keep a few over there and a few in this exchange, but then either way you lose one Satoshi or one Bitcoin, you're still upset. It's like it's not good for the whole movement.
Yeah, well, of course the thing is it's still an emerging technology, really cutting edge, and of course there's still some problems to be ironed out. So, you can get Bitcoin, but you have to be pretty savvy about how you secure it.
Well, I'm just saying there's options, so educate yourself.
Yeah,
but,
well, you can get a high security wallet like Armory. So say you, what you would do if you want to be really secure with your Bitcoins, you install a new operating system. So you might download Tails or I forget what the other one is called. There's another version of Linux which is meant to be really secure and anonymous, and then you would install a Bitcoin client like Armory on there, and you would use it to generate a wallet, a paper wallet, and print it out, and then you can put it in a safe deposit box or put it somewhere where it's really secure, and that way you can send Bitcoins to that wallet, but nobody will actually be able to access them unless they can find your paper wallet.
Which is kind of like your paper access form, because it's got all your details, got your codes and everything to get into it. I mean, that's the best way to make sure you're secure. But I mean, it's pretty hardcore to go through all that process and install them. But I mean, we're talking long term options. So if you're going to lock them away and you've got no intention of using them, that's definitely the best way to go about it. But what are all these people that don't know why you do that? Like, there's no crisis going on. What are you talking about?
Well, last time we talked about a possible currency crisis, like with the United States, just in the past few months, like in December of 2014, there was a problem where a lot of currencies lost value. Every currency lost value against the US dollar, and it seems like, well, around that time, in Mexico, at least, the price of silver, if you want to obtain actual physical silver, like buy a Libertad, then it went up about 180%. So I assume that's the reason for that is because when the currency started crashing, everybody said, "Oh, okay, I guess I need a bit more silver." Yeah,
it wasn't just. I'm not talking your silver dealer. I'm talking go into Banco Azteca. The prominent silver Libertad dealer in Mexico, where everyone would go to your bank to go pick up a silver coin. It jumped. It was a good jump, but it was basic supply and demand. I think now it's gone back down. It's still higher than what it was before then, but it's gone back down to something like, in an Australian dollar perspective, you're still looking at $31, which is still, you got a premium of probably at least 25% on what you can buy normal 1 ounce coins for in most other international spots. But I mean that's the cost of doing business. You want silver in Mexico? I mean, people are, I think, a little more silver savvy in Mexico. Silver coins and collecting or stacking your silver is pretty more common here than other countries that have been at. But I mean, you can see that through the price.
Well, I did see someone selling Libertades for like 600 pesos the other day, but it wasn't at a coin dealer. It was at the jewelry center at San Juan de Dios.
And they've probably got people buying.
I guess so, as collectibles, though, not as like a way to save their wealth or something. It's just like something fun to get. Maybe they drill a hole in it and put it on a bracelet.
Well, either way, they got sound money, real money.
Yeah.
But it's okay. Let's just jump in from that to back to the currency wars and the drops. It's all seemed to be. I mean, this is about a month later, and it appears to have settled out, like back to normal again. But I'm not too sure what's gonna cause that to jump again. I know. I mean, there's always questions about who owes who gold in the Europe space, and their issues with Greece. But I'm not sure if that's even going to be enough to upset, I guess, people that are living their day-to-day life. That that they've got no idea that there's possible crisis, or just find it hard to believe that there's an issue with money and their currency and their bank accounts in the first place.
Yeah, that's right, and that's the strong power of the normalcy bias. Like if you've grown up in somewhere where the currency loses money every year, and you know that, but it loses money. It loses value very slowly over the years. then you're not going to expect that tomorrow then maybe it's only going to have half the value. But maybe that's something we'll see. The other perspective, I was listening to Robert Kiyosaki's book, the audio book version of Rich Dad's Prophecy. And in that book, he goes, I believe this book was written around 2002. And what he talks about there is some other economic factors which can come into this. And he was predicting that in around 2016, there's going to be an economic collapse at significant proportions. And he wasn't talking about because of currency. He was talking about because of the way that superannuation and 401k plans are structured and the laws around them are structured. So the thing is, for many years, in the United States and in some other countries too, the way it worked with retirement was your employer would fund your retirement, so they would have to save thousands or millions of dollars to cover their employees' pension plans when they're retired, and the employees would receive those benefits until they died. But that system got changed because there was a whole bunch of problems. Things were happening like kind of corrupt or a little bit ethically questionable deals, things where big businesses would look at other companies and they would see these smaller companies where the biggest part of their business was actually the pension plan that they'd got saved away for their employees. So they would buy these smaller businesses, suck or embezzle the money out of the pension plans, and then leave this dry, empty shell of a business. So a lot of people were stuck without pensions when they retired. So it got changed into the system, which is what a lot of countries have now, superannuation or 401k or IRA plans. And this is where the employer matches the contribution. So in Australia, at least, I mean, the employer has to put at least 9%, or now it might be 10%, into a superannuation plan, 10% of your salary or wage into a superannuation plan. And in the United States, I don't think it's mandatory, but the employer will still match everything you put into your superannuation. The problem with this is the superannuation and the 401k, the IRA, they normally they don't have hard assets like real estate or gold or silver or something physical, some physical commodity like oil or something else like that. Normally they have paper assets, just paper, like stock shares in companies, bonds, and certificates, things like that. And even cash, they normally hold quite a large percentage in cash, like 10 or 20% of your portfolio.
It's easy to check. You can jump into your super and have a look at how most of them are online now, and you can have a look at where, what percentages of how much money you have and then what percentages are allocated to different types of assets. And I mean, once you do a little scratching and investigating into what's a hard asset, what's worth nothing, you begin to wonder that you're not sitting so safe. And I know most of my friends, when you first sign up and you first start your job, it's not even something you think about. It's like, when I'm 65, I might have access to this money. Yeah. And that's all government controlled. I mean, they're lifting that age higher and higher all the time, or at least talking about it because of this issue you're talking about. I mean, if we're all pulling our money out at the same time, then of course, something's going to give way. But that's not even the problem. You're talking about paper markets being inflated because there's nowhere else to put this value.
Exactly. Yeah. So the stock market for years has been artificially pumped up because of all this money flowing in from superannuation. And next year, in 2016, a lot of the baby boomers are going to start to retire, and they're all sitting on these type of plan, 401ks and superannuation, And yeah, that's going to mean a lot of that money is going to be taken out of this stock market. And I'm not really sure what the effects of that will be.
High sales in wheelchairs and accessibility, new types of cars and things. I mean, I'm talking the cars. The issue is these are old people. So, these people aren't going to be the first people out to riot when all the banks just fall over and they don't want to give your money away. Give your money back. Because it is your money. I mean, you worked for it, right?
Yeah. Well, that's that's what they always say in superannuation ads in Australia. It's your money, Make sure you take care of your super. Find the plan that's right for you. Because after all, it's your money.
But
and I'm like, well, hang on. What do you mean it's my money? I mean, you're taking it off me. You're not allowing me to touch it. You're not allowing me to manage it. And
you're going to tax me when I take it out.
Yeah. So in what sense is it really my money? I mean, ownership is supposed to grant me the right of exclusive control. That's what ownership is. But, governments still like to twist words like that.
What's the term they use? A bail-in.
Yeah.
Bail-in.
Bail-in, yeah.
I can see that happening.
Yeah. Or in Australia?
Well, I mean, all the banks are connected. I don't think it really matters if we isolate one country.
Yeah.
I think if one country was to do a big enough country was to do a bail-in, then you're going to feel that effect across the whole world. In Australia, I'm sure they'd give it a better name. They might market it differently. I mean, Australia's experienced before. I mean, we've come across where banks have limited how much money you can pull out on a day-to-day basis. I mean, they don't advertise that, but that's happened because banks have come too close to the line of capital, of hard capital they actually need to hold. I mean, that happened with NAB only in the last 2014.
Right.
But I mean, you have to look for it. I mean, none of the big media companies covered it, and I mean that's kind of the first signs of cracks in this big international system, or the fact that the Commonwealth Bank. I mean, you look at the shareholders, and you realise who actually owns these strong Australian banks. Not you guys.
Well, who owns the banks? Well, a lot of people have shares in blue chip companies in Australia, like Commonwealth Bank.
Well, I guess in that respect you do, but then you got to question whether you own your super to start with. I mean, I don't expect to see it before I'm 70.
Yeah,
I think if the politics go the way they are, then they're going to push that age a little bit further. I mean, we all are. I mean, we're all going to see 100, right? I mean, we've got advancements in technology in the health industry. And I think people, as a trend, want to take care of yourself better, or at least be conscious of what you're consuming. I mean, that's a start. So if we're all living longer, of course they're going to push the super age back. And it's not in the interest of any country to lower it. I mean, why do you want people using up possibly the only asset that a particular currency might have? Yeah.
And the asset which is keeping the share market, the stock market propped up. So, there's a lot of powerful interests, a lot of powerful people, and it's in their interests to maintain that bubble as long as they can so they can hold onto their money or find a better way to store their money rather than keeping it in the stock market and getting screwed when everybody starts taking their money out.
And that's with the assumption that there's going to be more work and that everyone's going to keep contributing. Because if you've got a large population pulling money out and there's not enough going in, well, we're back where we started.
So you took out, or you're planning on organising a self-managed super fund?
I had a couple of super funds that were kind of floating around, and I know there's been a big push in the last couple of years to consolidate your super. And of course, I think Australia's got, I'm not going to quote any numbers, but we're talking possibly billions of floating. No,
billions of super funds?
No, I'm going to say there's at least millions of dollars that are people super.
Okay.
There definitely isn't billions of super funds, but there's millions of dollars that aren't allocated, that are kind of just floating of dead accounts. I mean, Australia's renowned for just having floating money, where people, I mean, there's such a high population of jumping jobs to jobs, and for the biggest part, you had to go with the super fund that was industry related. I mean, I never had a choice. My first super, and not when I first started in retail. I mean, you know, I was just high school. You get a job at your local supermarket. Seemed like the thing to do at the time, and you're allocated. Yep, fill out this form for your super account. It was a retail super.
Yeah, but it wasn't like you were forced to go with that one. It's just that you weren't informed and had no idea what to do with it.
No, I'm pretty sure at the time.
Okay.
I mean, like, we're talking nearly 15 years ago.
Okay.
That you know, most industries you had the fund and you just went with that, which is why I think most Australians might. Well, I had 3. And I haven't really changed that many jobs. So people that done more jobs earlier, and you know, people that are older than me, would have had a lot more dollars in their super and across more super accounts. So there's been a campaign to consolidate all that. But now there's been a trend to I can see the options of like the companies that are supporting self-managed super funds, or at least super funds that give you access to at least manage a little bit. I mean, there's options of where you want to put your funds, and it might be something simple like, you know, high risk, low risk, but you can choose those options within your industry funds or your traditional super, if you're not keen to go and self-manage. But I mean, that's an option now. So anyone that knows anything, I think, would want to investigate where their super is and at least scratch their head with the option to self-manage, because there's so many options now. It's not that difficult. And I mean, there's so much literature on investment. It's like, I mean, we're discussing the difference between being able to allocate money to a cheap asset, a cheap, solid asset, and then when that goes up in value, you actually have more of the cheaper asset, which is now worth more, and then you invest it in whatever's cheap at that time, and you just keep rolling over assets. I mean, try and forget about the money and think of how much value you're actually holding.
So you're thinking of doing something like that with Swiss metals?
Well, Swiss metals were, I mean, they're actually quite innovative, as in they've got options to hold holdings of strategic metals. We're talking metals that are going to be used in high-end technology, in aviation and industry type metals that are consumable products or usable products for the products they're producing. And because there's limited access to these metals or a limited production per year, when there's a new product that's that requires these metals and these metals become high demand, obviously that sends the price obviously much higher as well. So if you're invested in these metals, which is often, well, I mean, up until now, there hasn't been any option to really to do that easily, where Swiss Metals has options for that, and you know, you can easily trade in and out of different packages of metals, which is something I'm interested in, because it just seems that having a holding of actual metals that are in demand seems to be better than maybe, you know, blue chip shares that are in inflated companies.
Which is again the Paradise Paradox. Watch us on YouTube, like us on Facebook. Watch us on YouTube, like us on Facebook. Tweet us on Twitter, and listen to us on iTunes or Pocket Casts.
We're talking about investing in assets, hard assets, opposed to papers and certificates and receipts for who knows what, in Ponzi schemes, essentially. You got some good examples of hard assets? I mean, other than bars and coins of gold and silver?
Okay, well, I've been listening recently again to Robert Kiyosaki, and of course, he loves to talk about real estate. He also talks about making your own business, developing it as an asset, something that makes you money, and maybe you can bring someone else to manage it, or maybe you can sell it when it gets to a sufficient size. And I think that's an interesting idea, because it's something, it's a little different to how people regularly think of investing or buying assets because it's something that you can have control over. You can change the direction of the company and make it more efficient, as opposed to buying stocks or bonds or something like that, where you have approximately zero control. With shares, you get the option to vote in the CEO every general election, but that's about it. So that's interesting. But yeah, with the real estate, he talks about how his normal strategy is he looks at least 100 properties, and out of those 100 properties, he will maybe buy one. And if that one falls through, then he will go start looking for another 100 properties. And it seems like we were just discussing this before, and you were saying, like, in a certain neighborhood, you were like, no, there's no way I would buy there, they're too overpriced. And I said, well, the idea is that you keep looking. You don't just get look down a street and see there are 3 houses for sale and look at their prices and say, I'm not going to buy here. It's about looking at things in more detail to some extent, because sometimes you can look at a property and look at the price and look at the rentals for the area and say, well, no, that's just not going to work. But sometimes it's a bit, sometimes it'll be borderline and sometimes it'll be a real bargain.
Yeah, something interesting that you mentioned was that you're looking at 100 houses and you might not buy any.
Yeah.
But the fact is you're making contacts, you're meeting people, you're getting to know the real estate agents that are working in the area.
Yep, you get to know the language, the vocabulary, which is very important.
Yeah, and you can even put your name down on shortlists and things, because I mean there's it's quite often the ones that you're going to buy aren't the ones that are advertised in the paper or online. Mm-hmm. I mean, you need to be out there in the streets,
especially here in Mexico, because
no way.
You have to ask your brother. Your brother has a friend. Your brother's friend has a cousin, and he's selling a property.
Mexico.
Yeah, and if he wants to move it real quick, maybe you get a bargain. That's
well, I was surprised that even though I originally thought that land in Mexico was cheap, and it is, depending on where you're looking. But anywhere in the cities where you have working class people that are now able to get cheap credit is inflating the prices of like new real estate. The cheap credit usually implies expensive asset.
That's because when people have quick access to credit, they can go in and borrow a house. Maybe, well, in some cases, they can't even afford the payments, but let's say, people couldn't afford the payments, but the interest rate is quite low, so they can buy more property at that price because the loan is cheap, and that means there's more demand for buying property instead of renting. The
system here is a little bit different to what I'm used to in Australia, the way people borrow money. Somehow you gain points through their social healthcare system. More. And yeah,
you mean like the social security system or something?
Yeah, it's like that. It's like if you're everyone that has a job, the company has to pay into a collective healthcare, which seems pretty straightforward. But you collect points on how long you've been working for in your healthcare, and that puts you in different stages of how much money you can borrow.
Okay, I don't really understand it.
No, I got no idea either. I mean, this is what I picked up on a car ride a couple of days ago when we were talking about, new estates and, where I'd buy and, whatever, which it seems ridiculous because these companies that they look at your points on your healthcare statement and give you X amount of money, and then it's all about, well, you've been working for X years, you qualify for these real estate areas, these suburbs. And it's really that machine. It's like, you're allocated to, your level of, social economic level. It's like, there's your status, you're just put in. And the disgusting part of all that is that the banks that are associated with giving you credit and looking at the system, these houses are totally inflated because you're buying blocks of land, maybe 8 meters frontage, 15 meters deep, and they're all exactly the same. You fly into Guadalajara, you can see these suburbs. They're like The Sims. And they're all exactly the same.
Cookie-cutter houses made out of tiki-taki.
Exactly. But it's worse than that because they're tiny, they're all jammed together, and you're paying just a ridiculous amount of money. It's like $150 let's talk dollars, $150 per square meter, compared to something like $7 per square meter that you could find half an hour away if you have enough capital.
What, $7 per square meter? You're not talking about developed property. You're talking about an acreage.
Yeah.
Yeah. Well, that's different. You're comparing oranges and apples there.
Well, not really, because I'm talking about the access to buy blocks of square meters of land.
Okay. Because you're saying $150 per square meter. I could buy a house for that in Periférico Sur, like in the sticks. I could buy a house for $16,000. It would be like a 90 square meter house, but it's a house.
Okay, so now to extend the example, we talk about a family that's living week to week, paycheck to half paycheck, and they have no chance of saving money because it's just impossible surprises. So to be able to save, what could be, let's say, 6 months worth of money to put down for an informal loan to get a block of land, and then have to go through the process of building a house or something, like you're going to go really cheap, like entry level, compared to collecting your points on your social system and then going and getting a loan that you can't afford to then have a house in an overpriced suburb. It's like that's accessible compared to something that's cheap but not accessible.
Mm.
Well, I mean, and to take the example to a bigger scale, it's like $7 per square meter compared to $150 per square meter within a half an hour drive. It's like there's an entry for an investor compared to someone that's like living with a family. There's like no access. So, we're talking about people that have money can invest and make more money. Like if you and I could put together 200 grand, we could open up our own estate.
Right, and build a bunch of houses there and
build a whole lot of houses, sign a few contracts with a bank, and all of a sudden, we never work ever again. And that's probably not that's not that big a group when you're talking about putting together your super fund and investing in some land or a real asset. I know Mexico's very up and down like that. There's a lot of examples, a lot of potential if you're here to invest.
Yeah. Yeah, it's true.
There's a lot going on.
I think, if you have a bit of money, come to Mexico, you could probably buy a lot of land, buy a lot of real estate. Of course, it still takes a bit of savvy and a bit of hard work looking through all these properties. But when like I said, you can buy a kind of cheap and nasty cookie cutter property for $16,000, and here around El Centro, you could probably buy if you found the right deal, you could probably buy a house for $100,000 or $150,000, and rent it out for hundreds of dollars a month, $800 a month or something, and you'd be doing all right.
It really takes investing to like a hands-on level because it's just such a cowboy world out here, isn't it?
Yeah.
And learning the language because it's firstly you're dealing with Spanish, and then it's like a different business in business in Mexico is always going to be a little bit on your riskier level, I guess. I quite enjoy it. I mean, it's a good learning curve.
Yeah. Well, I think about someone told me the other day that it could probably get a 2-bedroom apartment for like 3,000 pesos, like 220 Australian dollars a month. And I know that if I got it in the right area, like somewhere near Chapultepec, which is a nice area, but just to the north of that, it's a lot cheaper, but still close to a nice area. And you get a place here for 3,000 pesos, maybe 3,000 pesos a month rented, and then you could rent out the second bedroom to people on Airbnb, and you'll probably pay your rent and then some. Yeah, be all right.
I quite like the idea because there's a lot of tourists coming to Guadalajara. It's quite a nice city. It's a safe city. It's big. There's a lot going on.
Yeah, there's a lot of students too. Students come from all over the world to study here.
So it's quite feasible. I mean, you could set that up quite easily. One thing, just going back to the asset idea. I mean, just the idea of putting together something of value. And we're not talking about ways of investing to get rich. Like not now. It's like we seem like there's a time when we want to try and hang on to what you've put together. Like if you worked, in my case, I've worked nearly 15 years, and the little that you've saved over that time in between adventures and everything like that, it's like I want to hang on to this because I don't want to start from scratch again. Like the majority of the world is starting from scratch, so they've got even less to invest, and they want to invest in something that's going to hold value over their short term or over their life, so they're looked after as well. The issue is the characteristics of value in the biggest asset that most of us hold, which in Mexico is pretty cash in your wallet, has interest in behavior depending on politics and central bank behavior and whatever.
Yeah.
So, which is interesting because the question comes up, well, how is my money behaving? And in most cases, it's going to be, most of us are on the urge of what a lot of us believe to be like an inflationary period of currency.
Yeah.
It's
a lot of central banks pumping out that money, and that's we keep coming back to that point. That's important. So the thing is, on the other side, you have Bitcoin. In some manners of speaking, you could call it deflationary, but it is inflating because every time someone mines a block, it spits out 25 Bitcoins, but that amount gets less and less over time. So in that sense, it's deflationary because the inflation is actually fixed. It's got a set limit, and there's if somebody needs to print some more Bitcoins, well, they're out of luck. You just can't do it.
It's not going to happen. It's locked in at 21 million, and that's it. I mean, for the meantime, I think there's a handful of people that are investing in a Bitcoin or a certain amount of Bitcoins, which they're going to use and spend and hold as they like. But as soon as there's no more of these, then it's not like we can go and mine more silver or recycle gold. It's like that is it. This is a fixed algorithm crypto.
Yeah.
So it's like you're going to hold an actual thing that's going to be one of a set. And I was interested. I read an article saying that there is a large majority of Bitcoins, early Bitcoins, that are just not accounted for. As people have lost them, or they're missing, or they're on a laptop in a dump somewhere.
Yeah, there's that. And the first million Bitcoins, so at the moment there are about 13 million in existence, but the first million of those, nobody knows where they are because those were the ones mined by Satoshi Nakamoto, the creator or creators of Bitcoin. And nobody knows where they put them. Perhaps they got rid of them, or perhaps they're still holding on to them. I doubt very much that Satoshi Nakamoto still holds on to these Bitcoins, because if he really was thinking of holding on to them for profit, he probably would have made his move by now when they went up to $1,300 last year.
Unless he's a time traveler and he's quite aware that he's going to go much higher. Or, we say much higher on a dollar value, but there's many companies.
They go up to $10,000 or $50,000, and then Satoshi Nakamoto buys the entire world.
Well, that's just relative value. But what happens when people don't want? They don't want dollars anymore. He's going to have to trade them through one of these companies that offer you something else. But I mean, this came about because we were talking about, the difference between an inflationary type money and a deflationary type money. And that was all about, well, why don't you just print more money and give it to people? I mean, at one point I had my words around the wrong way, and I was like, well, maybe quantitative easing isn't such a bad thing if the right people got the money.
Right. Yeah, well, I saw one episode of the Kaiser Report where somebody was on there suggesting that instead of giving this money to a lot of big banks, giving them bailouts and negative interest loans and all this crazy stuff, you could actually just give everybody some of the money, which I think it's a better idea than giving it to a bunch of rich assholes who maybe don't need any more money, or they don't deserve to have money that's indirectly stolen from the entire populace. I don't think it would be actually productive to print money and give it to everybody, because that would just mean that people would spend it as soon as they got it, and that would mean the velocity and the supply of money increases, and instantly the value has gone down. It might even lead to hyperinflation.
It's a little risky,
depending on the culture and certain other aspects. Yeah,
a good example, just to follow that, is what happened with Ford, the car manufacturing company of North America. The amount of money that was bailed into that company would have been enough, because the original issue was, you need to bail us out, otherwise we're going to have thousands of employees with no jobs, and that's going to
Was this Ford, or was it General Motors? Or maybe it was both, actually.
Actually, I'm going to say no. Sorry, General Motors. We're talking about the billions of dollars that went into bailing out that company would have been enough to give every single employee that would have lost their job millions of dollars. Millions of dollars. Like, you know what? You don't even need to work anymore.
Yeah.
Every employee just won the lotto. And that's essentially the check that was written. It was the same amount.
Wow.
And, and I don't see any innovation.
Yeah.
I don't see any research and development.
Well, I don't think any spectacular innovations are going to be coming from General Motors anytime soon. I think they'll probably collapse before that happens.
Well, I got nothing to say about that. But that's the outcome of a bailout. How much does it cost to keep a business like that running, and then to pump them a little extra money, and for nothing new to come about? And I don't think it saved the economy either.
No, it definitely did that. Well, that's one thing that comes up a lot, listening to like Peter Schiff. He keeps saying on the media, they say, there's green shoots, the economy is recovering, and Schiff says, no, it's all phony, it's all false. It's just this ephemeral appearance of an economy recovering. It's actually just being stimulated by all of this quantitative easing, and it's not actually real growth. There's no innovation, there's no production, there's no manufacturing improving in the United States. And when something happens to set off the next collapse, perhaps something like this problem with the baby boomers retiring and cashing in their 401ks and the social security as well, I suppose, because that's another problem. So when that happens, maybe it's going to set off a kind of chain reaction with the economy of the United States collapsing. And the expression is, when the United States sneezes, everybody gets a cold.
Well, hopefully not, because China's got their own international transfer money system now. So hopefully there's some change.
But why does that matter? Why does that are you saying that people will start trading in renminbi, in yuan, instead of US dollars? Well,
I think that's a major issue, because we look at Latin America, for example. Everybody, soon as anywhere south of the border starts to tremble with economic issues, every common folk run out of the street to go collect dollars, as in that's been the programmed safe zone.
Yep.
which is just buying the US more time. But
Yes, yes.
if there isn't any of these green shoots and no road to economic savior,
Yeah.
what is happening?
I have no idea.
Wizards,
don't know.
magic show, rabbits.
I don't know.
It's pretty good.
What's happening. It's
It's a pretty good show.
We got second row seats to the freak show right here.
Well, I don't know. Yeah. Who was that?
George Carlin.
Excellent.
He said, in the United States, you got front row tickets to the freak show, but we're in Mexico, so.
Did you come across the article where a few people have wrote about it now, a few YouTube videos, that Russia and Mexico are talking about strengthening the Mexican army or military force?
No.
Because there's some awareness of some event that's going to happen in the US, and they don't want Americans, citizens of the United States, jumping in their SUVs and driving down to Mexico. So they're going to fortify that wall they built. I'm just happy there's something already there. I mean, it doesn't seem that crazy.
You're happy something's already there to keep gringos out.
No, it's just because Mexico never. I mean, you've seen the construction here in Mexico. I mean, at least there's something already there. It would never get finished. I just don't think it'd be a good thing for Mexico if you've got a few million SUVs coming down the street. not at once. That's gonna send up my fruit and vegetable prices.
Maybe, because all the people from the United States coming here, they won't be the rich ones. They'll have gas money, and that's it.
So what does that mean? We need to set up businesses to give these guys jobs?
Yeah, maybe. Yeah, take advantage of all the gringos coming down and put them to work. Yeah, something like that.
maybe that's the answer to the economic green shoots.
Yeah,
Stimulate.
the gringo shoots.
Yeah, exactly. Go back to work. But I catch a bus from here, and let's say we go look at some property. We're looking at some $10,000, $16,000, $20,000 blocks. Just north or wherever, just outside Guadalajara. You catch your normal bus, you're going to drive through many different various socio-economic level communities, and nearly every single community has their main street. And it surprises me because I'm not used to having a 1-hour bus ride and seeing maybe 20 well-established microeconomies. A set of your local hardware, your local corner store, your local laundromat. Every single little community has them, and then I thought, what, if we were able to, let's say, look at the contained area, like contained little community, and measure how much money is going through there, and just double it, then that would give people access to more. But then we have the other side. Well, then of course, you increase the money supply, then the price of the assets, or the price of the consumer products, or the value in the area, is also going to double. So you're back where you started.
Yes.
And then I pose a question. Well, then why are we investing in stuff? And I mean, that's going to increase my personal purchasing power. But is that like the 101 block for rebuilding the economy?
What, by investing your own money?
Yes.
Okay.
By looking after your own world, by investing your own money into your own assets, and not worrying about crisis. There's no crisis. I'm not going to experience any crisis. I'm solid.
How do you know?
Well, the thing is, you don't know. But I just don't have any time to worry about what's going to happen. It's like I'm not the one.
Is that why we're doing this episode? So you can tell us actually you have absolutely no plan, no idea. No preparation.
Oh no, not at all. No. Well, I mean, it didn't. There's no intention of going down this path. But I'm going through my notes here, and you look at, if cheap credit is going to make expensive assets.
Yeah.
I can only look locally because I'm not the one printing all the trillions of dollars and handing it out to all my banker friends. That's not me. I'm not the one that's got unlimited cash flow that I can do whatever I want. I'm trying to build a business. I'm looking at, where can I hold, the currency that I'm holding at the moment, where can I invest it in assets that might actually give me increased purchasing power, access to maybe buy, a house in the future, so that I can look after my family. I mean, I just don't think the average person, I know the average person can't handle the stress if they knew everything that they probably should know, which is why the media is not going to cover all the topics. So it's like, just don't worry about it. Just keep going back to work. We'll keep advertising that your super's fine and that there's not going to be any bail-in option. Best not to worry about it. You just continue business as normal. And when if anything does happen, it'll be too late. But I'm hoping nothing happens. I'm hoping it continues business as normal.
I don't know. Everything is uncertain right now, and I'm not sure if everybody in the world really understands the extent of the situation, and having a fiat currency that's been bumping out for 44 years, which isn't backed by any asset. It's only backed by military force. I mean, that's some kind of crazy Orwellian economy, or I don't even know what you call that. It's like some dystopian world economy where it's based on blood and oil. It's a scary thought, but that's the world we live in. And that's a terrible idea to go out on.
Okay.
So that's what we're about to finish.
Dude,
say something positive.
Okay, when you put it like that, maybe it would be cool to be Tyler Durden, on the 22nd floor, looking at the credit companies fall over and
everything back to zero.
A few banks. I mean, there's going to be people zero. out of work, but we've got a lot of rebuilding to do, so it's not that bad. Yeah, and there's going to be a lot of Bitcoin money to reinvest. There's going to be a lot of people that's going to have value and is going to want to rebuild a new world. So this is holiday time. This is new world in the making.
Well, another thing is about robots. So robots are going to come in a big way in the next few years. Like there's already somewhat artificial intelligence robots. I mean, everybody's familiar with Siri if they have an iPhone, but then there's things. There's in Japan. There's like a greeter robot. It comes to the door of the store and tells you a few jokes and says I love you or whatever. And they're also used as companions for older people or disabled people or house ridden. And then there are manufacturing robots which can learn new things like Baxter. And then of course there are self-driving cars. So we're going to see not just like overtaking the taxi industry. We're going to see self-driving or autonomous vehicles like forklifts and mining equipment. They're going to be overtaken by this, and this means this huge change in the economy. It's going to be really disruptive. It's also really exciting. It also means that a lot of people are going to look for new ways to be productive because there have been so many resources freed up. It's going to probably mean a lot of pain in the short term for people who haven't prepared, but in the long term, it's going to be a beautiful and exciting world of technological wonder.
Start creating content.
Yeah,
that's unique. Start building your brand. Start making a new world for you.
Yeah, we're in the information age. Okay, my name's Kurt Robinson.
My name's Aaron Battle.
We're the Paradise Paradox. Thanks, and we'll talk to you next time. And press like, press subscribe on YouTube, on iTunes, on Pocket Casts. Leave us a comment on the website, theparadiseparadox.com.
Check out the website.
Yep. Press like on Facebook and press the Get Notifications button because that will mean you'll get notified every time we post something really cool. And have a good one.
Wash Hashingong.
Press like on YouTube, press like on Facebook.